Welcome everyone to kind of funny games daily, right? I'm one of your hosts, Tom Hartman, alongside the producer slash seducer Peter Hartman. Let's do that again. We're on the wrong show. We're on the wrong show. Practicing the
Seducer.
wrong one. Peter,
This,
the
this,
markets.
so, is this the red wedding?
I mean, no, actually, what we're seeing right now is completely orderly selling. Well, two things here. There's the equity markets, and then bond market and commodities and futures and all that sort of thing, and then there's Bitcoin. Up until Friday, I was sort of wondering like what gives with Bitcoin because Bitcoin wasn't falling, right? So we had a 5% drop
Right.
on equities, so Nasdaq, S&P, Dow Jones, that sort of thing, 5% and more, and then we got a corresponding 15% drop in Bitcoin at the same time. Then after that, there's a little bit of pause. Then glorious Liberation Day happened, and another 5% down, 6% down, or whatever in the equities, and Bitcoin was like up 80 basis points. It didn't even go down. I was like, okay, what's going on over here?
Not only Bitcoin wasn't strategy up as well. I saw strategy up 12% or something.
Was it?
I don't know. I saw this. Someone tweeted out something. It was a picture, quadrant picture of the markets, and everything was in the red, and there was MicroStrategy up. But that was a couple of days ago. That was 2 days
It
ago.
was up 4%. Yeah, but that bothered me, Peter. It really bothered me to see Bitcoin not drop. One, because it would have been perfectly timed to get in the last dip to get to 74,000 on Bitcoin. 74,000 on Bitcoin, as you know, I've been talking about and dreaming about and salivating about for the last couple of weeks now, saying that it's a level there that has not yet been mitigated. And it has not also been discounted from our yearly wave crossing it. So it's still a level that's still alive and well.
And
Still alive and well.
you were saying it might not go down there, but you were like, but it could go down there. And I kept going, I don't know. It looks like this is not going to head down there at all.
Well, it got close. It got to on the 14th of March. No, sorry, on the 11th of March, it got to 76.8, 76.9.
Oh,
So
really?
it was getting there, yeah.
I didn't know
And then
that.
it bounced all the way back up to 88. You'll remember that. And then I shorted it from there, and people are like, "You're crazy. What do you mean you're shorting it from 88?" It's like, no,
Oh,
no,
wait.
I'm shorting it.
I'm looking at the chart. I don't see it. I don't
I'll
see
pull it
it
up
down to
here.
76. I don't understand.
1 second, my friend. So that's over here.
Wow, look at that.
It's beautiful. So we had this drop here, this candle here in March 11th, 2025. We
Oh,
got to a low of 76 and change.
oh, March 11th.
March 11th, yeah.
Oh, I thought you were talking about since Liberation Day.
No, no, no. And then we had a run up to over here. Remember, there was the big trade up to this level.
Right.
And then I shorted it from over here. And people were calling me crazy for shorting it from over there. It's like, no, that's exactly the level we should short. And it's basically spot on. And then we head down lower. But over here, so you'll remember here, I was saying on last week's show that if we can get down to over here and then bounce up, that would, to me, would be the most bullish of cases.
Right.
We come down here, clear all the levels, nothing left to hold us down, and we could head back up. So the fact that we didn't drop on Friday, which was over here, that we didn't drop in this area over here bothered me. Okay, it really bothers me. Now I just followed the levels on the chart, so I don't have to worry so much about that. But it bothered me that it didn't drop, because you're like, what's going on? What's the selling in the equities market? I mean, everything sold off. Gold sold off, rates sold off, tech, everything. I think all the sectors were down, or almost all the sectors were down, and then Bitcoin wasn't. I was like, strange. And other cryptocurrencies fell, but not Bitcoin. So there was a case to be made there, and I was actually saying this during the week that, hey, maybe because liquidity, our liquidity tracker is saying that we are going to get a rise in liquidity. Maybe that was being sold into the price, right? What do I say all the time? You can have corrections in price or in time. And so it could be that sort of thing that we're not going all the way up, but because like we're not actually blasting up, but because that selling or that buying is being eaten up by a bunch of selling over time. So that could always be the case. But I'm actually a little bit more relieved to see what is it, the 4% down today, um, because that would be more in line with what I'm expecting to see from equities. Whenever I tweeted this out on the Traders Post account, whenever you see the markets close at the lows, so here the markets close at the lows of the day, like it didn't bounce all the way back up, it closed near the lows of the day, it means the selling's not over.
Right.
I said the same thing over what was it? Over I can't remember which candle it was, but it was earlier, somewhere early over here. No, it wasn't there. It must have been this one over here. But I don't know. I can't remember exactly. But there was another low, and then we had a little bounce after that. I was like, okay, fine. I don't care so much about the bounce. The bounce was not, it's a dead cat bounce. It wasn't even it was barely a dead cat bounce. It was a dead bowling ball bounce. It like barely bounced at all. And then we rolled over to new lows. You'll notice over here when we take a look at wave on the S&P, wave is over here. This is the yearly wave over here.
This is a
Another
NASDAQ.
bounce. This is NASDAQ bounce up. We moved up towards the volume weighted moving average. We didn't quite get there, and then we rolled over here. We bounced again up to the volume weighted moving average, and then over again. So our tools work just as well for the broader indices. And where did we land to? We went from one of the wave levels to where? To the next wave level. Actually, we're at the volume weighted average price. So chances are tomorrow, at least, we get down over here and then we get a bounce.
Okay, bounce and then okay. Anyway, I got so many questions. All right. So
Back to baby Bitcoin.
this is all because of Liberation Day? Like this is because of the tariffs, or is there something else, or is it a confluence? Like what's going on?
Yeah, it's because of the tariffs. Remember, uncertainty is volatility. That's what volatility is in the markets. The range of possible outcomes is wide. If you have the big bingo machine or whatever, and they have the balls rotating around inside of it, well, the more balls there are in there, the more likely any given number can show up. And if you only had 3 balls in there, well, your bet is far more likely, and so you have less volatility. The range of possible outcomes decreases. And so this tariff stuff, one, because of the wishy-washiness at the beginning, we don't even know what the specific ones will be, when it will be happen. Is it going to be? Has it already been decided? Is it negotiations on the side? Is it happening on the second? Is it happening on the third? How much? No one knew. And so billions and billions of dollars came off the table because, can you imagine you run a $10 billion firm and you're like, I'm just gonna let's just see what happens. Just leave everything the way it is and see what happens. No, you're not gonna have your job tomorrow.
So Warren Buffett
pull up
knew about
money.
this.
Well, he started selling way earlier.
Yeah, exactly.
Well, we all know that Warren Buffett is a tool of the government industrial complex, and that it's used. He's
Yeah,
used
so
to
he's the bellwether. Like they
Massachusetts.
knew this was going to happen. Like the first when I first saw this, I was like, Warren Buffett must have known. The guy's sitting on what $300 billion cash.
No, it's more that the signs of a recession coming are all over. And so, because when you're dealing with hundreds of billions of dollars, you can't just decide next month to sell. You got to start your selling 6 months, 8 months, 9 months, whatever earlier. And so the recession looks like the recession was scheduled for September of this year. But that's where we would see a big market correction to start, and then the recession bleed into the population. But tariffs looks like it kickstarted it, sort of like how COVID kickstarted the drop that was already going to happen. And so the question now is, has the recession been pulled forward? So instead of happening in September of this year, has it been pulled forward to now? Are the lows in? What is the market pricing in?
All right.
So for the last week, let's just take a look at let's take a look at the last week here. Let me just go back to my chart. All right,
This
so let's.
this just for the record, this Mercury retrograde is really just like kicking everybody in the teeth. All
It
right.
really is. It's great. No wonder so many people watched the astrology trading bot that we coded on last Thursday on Traders Post. That was pretty crazy. A lot of people looked into that. I think it's up to a few hundred now. Actually, let me just check real quick so that I know, because that was pretty outstanding.
Everybody watching, and I can see there's a few people watching here. We are going to be talking about the previous week's trade, and then we're going to be talking about the upcoming week's trade. You don't want to miss that. This is Sacred Prophet is about to tell you what the future is going to be like. And if you think I'm exaggerating, you can go back and watch the previous episodes, or just take a look at his Twitter, Sacred Prophet on X, and you can see the calls that he's made. Is it a guarantee? No. But what you're seeing here, what you're going to be hearing during the stream, is going to help you to understand what's about to happen. And the money in the market is all about predicting the future. So stick with us. It's going to be a wild ride.
Right. Well, I can't find the video there from last week. Thanks for. Oh no, there it is. 300 views. Yeah, pretty good. Pretty happy about that.
That's from the Traders Post coding that you did for astrology indicator.
Correct.
Wow, it's at 300 already.
It's at 300. Yeah, and that's just on Twitter, so we don't know how that's gonna go. Okay, so last week's trades. So that was over here. So that was the end of last week. Where are you? Here. Last week is March 30th. Yeah, March 30th. So the question is, when we're talking about it, the idea is that we're going to move up towards this level, the 85.9 level. That was the weekly trade. And by gosh, that's exactly what happened. It moved up to that level right over there. We clipped a little bit more, a little bit higher up because of the daily VWAP that's there. Because these levels were nearby. So the price said, hey, let's just go ahead and grab some extra and move down. I did take a short here and here. I did have to add a little bit more extra margin because we did get this wick up. But I don't care about that. I don't care about wicks. I care about closes. So I just went ahead and added another position. When we came back down, I took down my margin. And then the price came straight down. And where did it come straight down to? It came straight down to, you see how here the daily level bounced? So here, after the day, it bounced over here and went up.
Mm-hmm.
But down here, when we had this daily level that was created from from March 31st to April 1st, this level over here, we didn't actually touch it. We actually moved way past it. You see here, this wick almost came down to it.
Mm-hmm.
Almost doesn't cut it. Almost doesn't cut it. And the candle that happens on the day of the switch of this blue bar, that, even though that's at that level, doesn't count.
Hmm.
I have to lose a lot of money before I realized that was the case. It is a matter of that candle, the 2-hour candle, it bounces around. And we're looking at the 2-hour chart here. This is where we take a look at those the trades. I find 15 minutes you get too much volatility. Day trades you miss out on the position. But I look at the 2-hour candle, and since wood wasn't mitigated, I knew, well, we have to come back down to that level. So when
For
we showed
those
up
of you who are watching this maybe for the first time, the VWAP levels, Tom describes the market, the charts as OCD, like it has to touch that line. And at first it was kind of funny to hear him talk about it, but you see it in the charts where it has to, that's a VWAP, right?
That's correct. All these levels are VWAPs. All the straight levels are VWAPs.
And so I don't know, if you don't have those lines on your chart, I think you should do anything you can in order to get those lines on your chart. I don't know if you have to donate blood or other bodily fluids. Tom, what are you accepting these days?
Soon we're gonna have the our tool up, product up. People can sign up automatically, but for now, you can message me directly on YouTube or on Twitter, and I give people access. Actually, people have been messaging me on Telegram to get access. And I give you guys access. It does require you to sign up as an affiliate under me for one of our partner exchanges, crypto exchanges. That way, it doesn't cost you a penny more than you would already be paying anyway to trade these, especially if you do 50x leverage the way that I do. But I'm able to make money on that as well in order to finance what I'm doing. It scales with your ability, your success, and if you don't like it anymore, well, you didn't put anything in it to begin with, and we can just go ahead and part ways. But you just message me, and I give people access to that. and now you have them on your charts.
I don't think anybody ever wants to part ways with Sacred Profit. You're going to have to get a stick, Tom, and start beating people away with it. Anyway, go ahead. So the previous week. So I want to know more about the previous week, the trades that you called. You started with that. Let's carry on with that.
Yeah. So we always start with the weekly trade because that has way more probability of success and is generally has way more to move. Okay. So over here, when we talked about it, I think I even tweeted about it that the week move was to this level over here, but also that this daily level was available. So that's what happened. We moved up to that daily level, we bounced there, and then we continued upwards. After this day started, I called out this level as the level to look for a position down. So you could have taken the short to this area here, which failed over here. It didn't get to it completely. You could have taken it over. You could have taken it anywhere over there. But the thing is, when you take the daily trades, it's way more volatile. So here, let's say you took the trade over here. Let's say you didn't get whipsawed over here. You waited for, let's say, the day to close, like on this candle over here, though, on the candle right before the day closed. So you take the candle, but you take the trade. But what do you see is that another level gets created afterwards, the next daily level, which is above this one, right? Once that happens, you don't want to hold on to the short all the way down here. That time is like gone. It's too much of a risk because you can hold it to this level, which is what happened. It came to this level and you close that position and you in fact open a long. Why? Because our weekly level is still up here that we're aiming for. This weekly level is still over here. And so once we bounce off over here, we move up. You go, well, Tom, what happens if we actually move down over here? Well, you can't plan for every one of those contingencies. If you keep adding positions on, and I'm going to go on longer, short, and you could if you want to put in enough margin in order to cover it so that, you can take both you can leave this short position open and open a long, expecting that the price might go up all the way to over here. But then you have to add enough margin to this position over here to be able to suffer all this drawdown. It doesn't make any sense. Why? You're trying to make, what is it? What is this over here? Fine, you're trying to make 3% on that, which is 150% on the move. But there's so many more certain moves than that. That why do you want to double down? So let's say you even did that. The chances are that you get liquidated by some wick somewhere. You're still right in the direction, but you lose out on the trade. So whenever a new daily trade happened, like it did last week, that now that daily trade is not above where I was aiming for, that becomes my new target. And I close the trade over here and open the trade long up to my weekly level, which is what happened. We got this extra boost above here, and this is something you always have to keep in mind when there's another daily, another VWAP level nearby. Actually, it doesn't even have to be nearby, but the daily level was nearby, and our wave was nearby, this gray line, and this trend line, the straight trend line that we see over here. So there was like all the reason in the world to think that this level the price would get to, right? But the reason I don't call that out for the weekly trade is that our weekly trade is from the beginning of the weekly candle or nearabouts there to our weekly level. I don't like to be greedy because there's no guarantee that it gets up to this point. Okay?
All right. Hey, do me a favor, Tom, real quick. Just move the microphone just a little bit away from you. You're very passionate and peaking a little bit, but all right.
All right. So then after that, this trade worked out nicely. It came all the way down over here, closed the position.
A little too far, Tom.
All right. So we get down here and we close the position out. So that was a nice, what was that gain? Right. That's 5%. So that's 250% on a 50x trade. Fantastic. Loved it. All right. So that closes up. Now, once that day closes over here, Peter, you see here how the price fell and it had to fall before this day closed?
It was rushing to get that line.
Yeah. That's what it seems like it's happening over here, but it happens all the time. That I'm just bringing this up to show you is that's a magic thing in the chart. There are people, there are institutions, there are algos moving the price. And so for their conditions to be true, it needs to get here. And for them, they have to clear that level. When I say the price is OCD, I'm being tongue in cheek. There are systems in place that need to get the price to that level. Needs to get to that level. And it's not for nothing that when this bounced up, it bounced up to our this is our monthly average. Anyways, that's too granular. That's not for the Sunday fuel. That's for more of other things. But it's no surprise that the price bounces here because the selling was not, like, turned on a dime.
Mm-hmm.
And we move back up. All right. So once this closed, the next daily trade for that day was here at 85.3. This is what I tweeted out, 85.3. And the price was trying to actually move to that level, right? But all this tariff thing happened, and we get this overhang, and so we couldn't actually get to that level, and we've now rolled over. So a couple of things to keep in mind. So this bounce off of this level, you'll notice that it bounced off a green zone, right? That's how I built our trend indicator, just as a shortcut, so you know that there's actually some strength over here. But this whole yellow zone over here is telling us that even though the daily level 85.3 is what we're aiming for, there's uncertainty. And we see that there. The price falls even below. It heads back up, not all the way. It comes back down, it wicks. It goes back up. It wicks down. It comes up. So this yellow is sort of warning you that it's not very clear that this daily level is going to be reached.
Right.
So when you see the yellow and you're taking the trades for the daily, this is for the daily trades, you usually want to go in with, I'll often go in with a half position, not a full position, because you might have to get in multiple times before you do. And often it's worth it just not to take it at all. The reason I take it is, one, I like the fun of it. I like to be able to be there for the rips, but also, I'm a degenerate gambler, so I'm perfectly fine with putting on half a position. And me, when I put on half a position, it's the price of my FOMO. If I put on a half a position, I'm not going to put on a second one. If I don't put on the half position, and the price moves in the direction I think it should go in, I get very annoyed. And halfway to the price being to where I think it to go to, then I'll go in one full position, sometimes double. Thinking I was right this whole time, and I can't believe I didn't do it, and then I'll lose more than I ever did before. So me, just for myself, I know what I need to do. I need to put a half position on, because then I can go talk to my wife and play with my kids and not have to worry about it. But I don't recommend that to anyone, and you've never seen me tweet out that anyone should do that.
Mm-hmm.
Okay. There was a green level that showed over here for the next day, but you'll notice here that green level was here for this bounce. You see how the price actually started on that day and actually came down to that bounce?
Mm-hmm.
And then a super weak sauce. So you could have taken a long over here, but you lost out on it because it then closed down afterwards. So it ended up being a failed trade over here. This trade from over here to over here was successful, but I don't usually tweet those out. In fact, I don't even think I did it this week, because it would have been 0.7, 70 basis points, which is not enough to get out of bed. It's just too much risk for that sort of thing. This bounce, though, I did like. So I did take that trade, and it failed over here. I like that it failed on a natural area at I believe that's the monthly. I forget what teal is. Teal is the monthly average. Yeah, the monthly average. It failed, and then we head down there. Where did the price fall down over here? To the low of our trend level. So it's sort of confirming this uncertainty. Then when we bounce back up over here, I'm not sure if you see it very clearly, but this level is actually red.
Yeah, I can see that.
So once we got to the top of the area, actually right at this VWAP, when it broke, I took a short over here. So now I'm currently in a short. But I generally don't tweet out signal levels for Saturday specifically, because Saturdays, I call them sideways Saturdays, because almost nothing happens on Saturday. So this is this is Friday. So this Saturday over here, I don't generally say anything, because if you take a look at other Saturdays, you'll probably laugh at this, Peter, but so the Sunday here, Saturday, something did happen. Let's go back to another one. Here, Saturday, sideways. Um, Saturday sideways. Saturday sideways. You could almost tell where on the chart are Saturdays because of it. Saturday sideways. So I generally don't. There's usually nothing really to be gained from trading on Saturdays, even though this Saturday there was some sorry, this was a Saturday. There's some volatility to it. It's still minor compared to what we've been seeing. So I don't take trades at that period. And then now I'm in the short until this week ends, and we're falling now into the weekly end, which is often what happens. We either fall into it or rise into it, depending on what the natural trend is that we've been exhibiting. Since we've been in a downtrend for the last period of weeks, the chances are that we fall into the end of this week. Okay.
All right. So what is this? Look, this is why everybody's here. The upcoming week's trade. What's coming next?
Okay. Well, here, it's 245, 241 right now. This candle, this is the 8 o'clock candle. So there's a 2-hour candle for that starts at 8 o'clock, ends at 10. So we won't know for sure what the weekly target is until that candle closes. Until the 8 p.m. candle closes at 10 p.m. We won't know. But it's going to be around this level here of 83.5. So it'll probably be like around 83.5, maybe 83.4. That'll be the level to take a look at. So over here. Okay. The next daily level is going to be around 82.1. Let's call it 82.
How can you say that if you don't know what it's going to be until it closes?
Well, it'll be around that area because what we're seeing here, I don't know if you can see here, it's developing. I will show where it's developing. Even here at the bottom right chart, I have a table here that tells me, okay, this is how much time is left. This is how far away we are from it, and whether if it's green or red or yellow, if it's going to be bearish or neutral or not. So I do have an idea of where it'll be because since these are volume weighted average prices, there's not a lot of data points that we're going to get between now and the end of the candle before the close of the session. That's going to be pretty significant. Like even if this price fell all the way down to over here, this 83.5 level might not just be 83.4. It might just be 83.5. It's not going to all of a sudden be 70.
And if you sign up to your signal indicator, you get that chart at the bottom right.
Yeah, you get that chart on the bottom right, but you also get the numbers that you're seeing over here are telling you what the next level will be if the candle closed right now. So this is why it's useful, very, very useful for you to get these indicators because there's only so much I can point out. Also, you'll notice that other people will use other indicators as well that they're used to, and you might see things and warning signs or whatever that I'm not picking up on because I'm just using our indicator from our set.
Right.
So here, just like we talked about over here, where this candle fell all the way, literally within 4 hours, it went all the way down to the next level. This candle, we could very well close at 76. This is 76.4, is it? 76, yeah, 76.4, or heck, 74 down here within the next, but before 8 o'clock tonight, before 10 o'clock. We could absolutely get down there. Absolutely. Wow. Now, the best case scenario is that happens. I know. People don't want to hear it.
Why don't people want to hear it? That sounds great to me. First of all, buy the dip. Second of all, then it's blue skies.
Well,
potentially.
What people are saying now is the Trump tariffs killed the Bitcoin cycle.
Wait.
That's what they're saying.
They're saying what? What are they saying?
The tariffs, Trump's tariffs, killed the Bitcoin cycle. This 4-year cycle has been truncated. Has been killed because of the tariffs.
And what do you think?
Absolutely not. Well, I'm not saying that it can't happen. What I'm saying is that the charts don't say that. I've been calling for 74 way before this. The 74 level is still in a long-term bullish uptrend. And one of the things people have been lamenting about Bitcoin is that we actually lost volatility. So from 2012 to 2017 and the big run up over there, Bitcoin went up 50,000% or whatever the hell it is.
Right.
And then from every cycle after that, it's gone up less and less and less than that. And this time, I think it's been weak sauce. as far as people are concerned, because the volatility is decreasing, which happens naturally as people's uncertainty about the asset decreases. I don't know why people don't get this. You get lower volatility. That's why I like 50x leverage trades. I get my volatility back. I get my performance back, but the underlying volatility of the asset I'm dealing with has decreased.
So
You don't get that with other assets.
So you don't like that this volatile right now, then?
Hmm.
Because if your 50x
This
relies
drop to
on,
me is not significant.
oh, I see, nothing to worry about.
Now, seeing it in the stock market, 6% down, that's significant for the stock market.
Yeah, I've been watching the coverage on it and seeing people, they're like losing their minds. The world is over. What's Donald Trump doing? First of all, as far as I understand, he's doing exactly what he said he would do. You
Exactly.
told me in previous streams the guy is actively trying to create a recession to bring down the interest,
Long-term interest rates.
long term in
Exactly.
the 10-year. Scott Besson is sitting there going, "This is great."
That's exactly what he's saying. I mean, they have not, from the beginning, been perfectly clear what they want. They go, we want long-term yields down. Now, anyone who's in markets knows if anyone says we want long-term interest rates to go down, they mean they want the market to go down. I mean, the thing that causes long-term rates to go down is a shock in growth. Maybe I should do a video at some point just explaining the difference between the different tenors of interest rates and what it means and how they position each other, what that means for the markets. But if long-term rates that were up because of inflation come down, it means inflationary effects come down, which is what they say. Like, we want inflation down. Okay, if you want inflation down, then we have to kill growth. I don't know what to
no,
tell you. We got
no,
to push growth.
what they want is everything to be fixed without any pain,
Any
without
pain
any
whatsoever.
trouble. That's when I watch the media, that's what it looks like. They're like, I think, do you think there was a problem with the debt and everything, how it's going? Yes. Do you think we should fix it? Yes. Should there be any consequences to anybody for it to be fixed, or should it still everybody green and everybody
That's
great?
right.
That's what they seem to want, and I don't
That's right.
understand the hair
There's
on
no way.
fire panic that people are having about this.
There's no way to do it. There's no way to do it. We want mortgage prices to come down. We want that. How are you going to do it without killing growth? You have to kill growth temporarily, at least. The thing that drives me crazy also is that
And I do want to get back to looking at that chart. I want to see the upcoming trade.
right,
I want to make it clear for folks, but go ahead.
that the whole point of a central bank, they're like, hey, we're gonna help smooth out the business cycle. That's the whole premise of it.
Right. You talked
By
about this on Traders Post.
That's right, decreasing the volatility, and so what that means is that when the business cycle, the growth cycle has dipped a little bit, we'll goose the market a little bit, goose it up and bring up the bottom, and then when it's a little bit too hot, we might have to fan it out a bit because we put too much in. We'll fan it out. It'll be easy. Just like if someone gave you $100,000 credit card, you go, I'll spend some when things are down, and I'll pay it back, and then that'll be what I do. Well, what did they do? They just spend,
Just the gas full
and
on.
they never pull it out. And so Donald Trump is there, like going, okay, so we're gonna pull back on it, and your massive wealth, right? What is it? To the most number of billionaires over the last 5 years than ever before. The discrepancy between the rich and poor higher than ever it was, and blah, blah, all that sort of thing. If you're exposed to the markets or hard assets or anything like that, you made fantastic amount of money. If you're not, you didn't touch it by it at all. And he's just saying right now the markets are down like 20% since the top. And I'm like, 20%, I'm losing 20%. Yeah, you're losing 20% of the millions to billions you've had over. You're still obscenely well off versus the regular person. And so Besson is out there. I think Besson and Lutnick and all these people are like, so the stock market is down 20%. Who cares? Which is what you would want from the president who wants long-term yields to go down. Anyways, the reason I look at the end of it is that they're essentially telegraphing also that after this comes down and they're able to refinance the debt at for lower interest rates, that they're gonna bring in cowbell and QE.
Right.
You saw Trump tweet out the best thing that Powell could do is to lower interest rates. I think even lower the interest to zero or whatever. This is what he's saying. So they actually want to pump the thing back up after they do what they need to be doing. So baby birds, you don't have to worry. All right. Yeah, King Trump and Papa Elon, they're planning on goosing this engine, and so I see these drops, these dips as cliche phrase, generational buying opportunity. It's
And
like when I
Tesla, go ahead.
tell people go, I want to buy the stock, like I want to buy Nvidia,
But it's
right?
down.
I want to buy it, but it went down. So buy it when it's down, and then sell it when it's going to go up later. But I don't know it's going to go up later. Well, then why did you want to buy it when it was higher up? Didn't you think it was going to go up still? Like they're like, yeah, but you don't think it'll go up just to where it was before? That's what you're worried about. So what is it that you're buying?
Well, you
I
told
only have confidence that the things are going up if they're currently going up.
us.
And if there's ever a dip in that, then I have no confidence in that. And I think it's going down. Okay, then short it. Then sell it. If that's what you're worried. No, I can't do that. Okay, so you don't know what
Well,
you're
you
doing.
told a story about your stepson who is like learning trading, and he finally kind of realized he's buying high and selling
To sell
low.
higher. Well, he wants to buy high to sell higher, and then he sells low to sell lower. But he ends up buying high and then cutting out that position when it gets too low, and then the opposite for shorts. So I said, why don't you buy low then sell high? And he was like, I guess that's not what I was doing. Oh, so no, I'm not worried about it.
All right,
Okay,
let's
let
go
me go
back
back
to
to
the
the chart.
charts. I want to see what's coming up next. All right. This is
Okay, so
exciting. This is exciting. Okay. I finally kind of understand the markets and the charts, thanks to your, um, honestly, I look at your chart the way I see it. It's like when you read the Bible, but it has all the addendums and all the extra explanations. You're like, oh, I finally get Psalms.
I need you to say it. I need you to say the Matrix line.
What you see is a blonde, brunette, redhead.
Exactly. And now you're getting it too. You're like, oh, okay, this makes total sense. All right.
Well, we keep dropping 78.
So the weekly trade this week, I'm going to be tweeting it out tonight, but it's likely to be whatever price. It's going to be towards 83.5. Okay. Actually, just remind me there's something I want to say about that, about how to enter into the weekly trade, because I don't think I've actually ever talked about it. Now, what could happen? This level over here, this daily level over here, didn't get touched over here.
Uh-oh.
The charts don't like that. It does not like that. So we had this unmitigated level over here that hasn't been touched, and we have this level over here that has not been mitigated or annulled by the wave. So our weekly wave right now is at 73.7. It's so close to 74, but it ain't 74 yet, my friend. And remember a couple of weeks ago, I was saying that sometimes these waves will coincide with the mitigation line exactly at the time where the price hits it. There's something about the Lord of Liquidity, may his rule be long and lasting, that has these coincidences, these synchronicities, these 11/11s that happen exactly at the time they need to. So there's something about it that I've been calling for a liquidity jump around basically April 7th, basically by tomorrow.
And by the way, that waves is the moving average, right?
They're volume weighted moving averages.
I mean, waves, right?
Yeah, these waves on my chart
Mhm.
are volume weighted moving averages of specific lengths.
Gotcha. And you're saying that once that volume weighted moving average crosses past the VWAP level, it eliminates and annuls that level and it's no longer pulling the price. But until then, that VWAP level is calling the price down.
Yeah, it's no guarantee that I'll stop it, but it makes it a bit highly unlikely that'll occur. I mean, at some point the price will cross below there, just like it does in every bear market. At some point it will. So let me just correct what I'm saying. Like over, where is it? No, bear market over. So over here, we did cross below, right? So if something like this happens where it bounces off the yearly thing, but then we don't actually make all-time highs and we actually break below it, well, you're not going to have me say
Right.
I'm going to say now we're entering a bear market. If we close below, I'm going to say we're going to enter into a bear market. Right?
Yeah.
And so even though we bounce around here until we actually, in fact, I think, do you remember, Peter? I think when this happened, I was shorting from over here.
I can't remember.
It's from our group. I have to go back over there. Yeah, I shorted a bunch of this thing down over here. If we don't close back above it, then we're still in a bear trend. In the same way that as long as we don't close below it, it's still bullish. So like all over here, it's still bullish, still bullish, still bullish, still bullish. These are all dips to buy until it fails. So I'm not trying to say it won't go down there. I'm just saying until the price closes below this level, it doesn't mean anything.
Gotcha. All right.
If it does, you'll see me change my tune. But what's great for us is that we can make money in the bear market too. All the same things that we're talking about is the same thing. I don't actually need Bitcoin to get to all-time highs. I'm actually not even very enthusiastic about that. Let me just be clear about it. Because when we're inside of blue sky territories, my levels don't print. So I just got to sit around hoping for a pullback or whatever for something to happen, right? When this whole thing happens here, there are no levels, right? There's no levels being triggered over here. It's all blue sky. But once we retrace down into this area, oh, well, now Tommy Boy's got all kinds of levels to deal with. So we'll make money in a bear market. We might even make more money in a bear market because of how much more violently it goes down. You're not going to be sitting around waiting for that. And whereas we don't yet have a tool, I mean, I do have one coming, but I haven't publicized it yet, to mark a top. The closest thing we have right now is our liquidity tracker. We do know roughly where the bottom will be because our wave levels do a good job of pinpointing where a bottom might be for the cycle. But that's for later on. For this week, what we want to be paying attention to is the idea here that we could absolutely get down to this level. Let me go back over here. We can absolutely get down to 76.4 or even 74 by tonight. Totally possible. So when do you enter the weekly trade? Don't enter the weekly trade as soon as this candle closes. You could, but there's a risk of that. Very often, on the first day after the weekly trade, there's a dip if we're moving up. And then the opposite for the other way around. So just to show you again over here. So for example, over here, this is the weekly trade, the weekly close of the candle, and there's a dip below. Over here, here is the start of the weekly trade, but there's a dip to the in the first day, which then you would take. Over here, this is the weekly close. There's a dip, and then this is the dip you would take in order to move up towards this weekly level.
So how to enter the weekly trade means...
Oh, I can't really hear you, Peter.
Carry on.
Okay. So that happens fairly regularly. It's no guarantee. So often you've heard me say before that I'll often give myself, depending on how much room there is between here and the weekly trade, I'll often take as much as 3 hits to get there.
Mm-hmm.
So I'll often take the first trade at 10 o'clock when the candle closes, then again at a low, and then again higher than that. Or again later on if there's another low during that day. The issue is that when there are nearby of these levels, that's usually where you want to be entering at. So I would be setting a limit order buy over here and a limit order buy over here, assuming that it happens within the day, and then that would be the trade up to our daily level here and our daily level over here. Does that make sense?
Yes, it does.
Okay, perfect. And then the thing after the weekly trade happens, I mean, if it doesn't happen, we keep on falling lower and we close below this level and we confirm it, then we're in bear market territory. We're gonna have a different tune, but until then, we can't count on that. and we're also going to have a bunch of daily levels that are going to show up that we can trade. I try to do revelations during the week just to let everybody know when those things are happening. If there's like good setups to pay attention to, like we did last week. So we'll continue that this week. But you can also use the indicators yourself and figure out what kind of trades might be best for you. The last thing I want to say on this is liquidity. So liquidity indication. Remember, liquidity is a lagging indicator. Sorry, it takes about 12 weeks for liquidity to bleed into the system. And so this liquidity that we're seeing here projected into the future has already been done. That liquidity started being injected in January 2025. This liquidity here, January 2025, when it started going in, has already started to happen. So we're just going to be responding to that. And if we take a look at the dollar, let's take a quick look at the dollar over here. You'll notice that the dollar went off a freaking cliff, which adds to liquidity.
Right.
Okay. So if this was going the other way, then I'd be like, ooh, now I'm really nervous, but it went off a cliff, and that's happening. So we'll see what happens there. But right now, the narrative of Bitcoin still making new all-time highs is still totally possible. Especially since what we just saw happened during OPEX. It happened during a period of weakness that we were expecting. People weren't hedged. There's all these dynamics that come into play. So we'll see what happens over here. But as long as we stay above this yearly trend, all these levels that we reached down here to me are bullish and they're to be bought.
So you're feeling confident about all-time highs, or?
Well, there's nothing to be confident about. You just read the charts, and if the charts are in your favor, if the bullish trend has not been negated, well, then you treat every low as a buying opportunity. I don't understand what's so hard for some people to get for that every one of these freaking dips were times to buy. I don't. Everyone looks back on the chart and go, obviously that would have been the perfect time to buy. But you know where everyone bought? Clearly here. I just don't understand how it's so easy for people. If over here, if I tell them to sell, they go, "What are you talking about? Sell?" And then these dips, I go, "I don't understand. What is it that you don't understand? It's the dips that you buy." The Michael Saylor chart that we saw that's been floated around recently, where he shows all these are all our buys. People were laughing like, "What? You only buy tops? What is this?" Okay. Anyways, so this thing is to me is still in play. Plus, the last thing I'll say on that, if we take a look at the liquidation charts, so we just take a look at liquidations here.
Oh, your favorite liquidation charts. It's not a Sunday fuel unless we talk about liquidation charts. Where is everybody? On what side of the seesaw are they on?
Well, look at that. It's 4 billion for this is the Binance BTC USDT pair. So it's not everything in all of the markets, but it gives you an idea. And you're looking at people all the way up to 100x leverage that are massively short. They're short by 4 point something billion dollars. They're short by 4 point something billion dollars, and they're long by like 40 million. If you take a look at the Bitcoin exchange on Binance OKX on a Bybit over the last 30 days, you'll see again it's 10 billion short and 72 million long. Peter, let me just make this perfectly clear. The 10 billion shorts, in order to make the money off the shorts, have to buy back $10 billion worth of the asset. There's no other way around it, right? The shorts have to cover their shorts, and the longs have to close their positions. And when they do, it adds that many dollars to the other side. That's why you want to be one of the first people to close out your positions if you think that the whole wave is going to happen the other way, because you get a short squeeze. We all lived through this with GameStop and AMC. I don't know why people don't understand that. Back then, it was like all the charts saying record short positions, open interest. They're borrowing things in order to short against the GameStop or whatever. And the whole plan was to just wreck that whole thing. Well, short squeezes happen all the time once the shorts get liquidated, and it's way harder. It's harder for shorts to make money because a chart can go up infinitely to the right and it can only go down to zero. That's why you'll generally have more people on the long side than on the short side. And when you have this massive $4 billion versus millions of dollars, that's literally an order of magnitude, people that have to cover. They have to cover at some point. So unless you think they're writing this down to zero, they have to cover. And the more that the shorts end up being in profit, and longs become less in profit, less people take longs, more people take shorts. Then what happens is that you've exhausted the number of people to sell to, right? And the number of people who would sell, and then it's everybody on one side of the boat. So then what happens? It sinks. And when that sinks and the buyback stops, as the buyback's happening, the more the people go, well, I don't want to lose out on the gains that I've had on my short. Let me cover it. More people do that, and then it gets up to the level people go, oh my god, I'm gonna go negative if I keep holding the short. They sell it, and then the people were like, oh my god, I just completely blew up my account because I thought it was going down and I was too nervous and I just left the whole position. They also get liquidated up and then go all the way back up. And we don't have time to talk about it, but if we actually took a look at the liquidation charts, you'll notice that the dips there, so after the big levels, the dips that happen over there, what do you think they correspond to? I don't know, VWAP levels. Here, I don't make the future, I just see it. That's what it is.
Well, it's fantastic. Upcoming events.
So we don't have a earnings season is coming up, so we'll see what happens there. That usually affects equities, so I'm not so worried about it on the crypto side. Fully expecting a market top in Bitcoin by like latest June, July. I think that's the cycle top, and we're going to be looking for shorts after that. We don't take directional bets other than what our charts are telling us. Please don't think I'm saying that you should front run it. I'm just saying that I would expect that to happen. We'll take a look at our liquidity charts. We'll take a look at what the positions are, but I would expect to begin for that recession then, and then see it really big drop in September and just ride that all the way down to the end of the cycle, which takes about a year. And then we'll be buying back in at around, I think right now it's at like 42,000. When we get there, we're going to be buying with both fists as our levels are telling us. We reach the low of waves, and we're going to ride it back up to $1 million per coin. And that'll be great. But use this time and use the next bear market as an exercise for practicing this 50x leverage type of trading that we're talking about. You're not going to find it in a bunch of other places, and you're not going to find tools that I think are pretty freaking clear and that get better over time as more and more of you participate and give me your feedback. So it's great times to be in. That's the events I want to take a look at. As the tariff thing, it looks like it's been settled. It looks like they promised basically this is what the tariffs are going to be. So we're not going to expect a bunch of volatility after that. And so I would not be surprised to see a bunch of money that come back into the markets. Why wouldn't they? Why wouldn't they want to come back when it's 20% lower? Can you imagine you sold at 5% down and you get back in at 20% afterwards? You're a genius. Why wouldn't you want to do that? So we'll see. Those are the events I'm looking for. There's no other major things that's on the calendar.
Once again, to make it clear to you degens out there, we got a degen right here, just so you know. He knows what he's talking about. These signals, these indicators are free. All right, and so if you want to be able to see these charts, look, I'm a amateur, I'm a nothing, I'm a nobody. I look at these charts now and I understand what's going on. If you want to dispel the mystery, if you want to get this power from Sacred Prophet, you can sign up to this. Very soon it'll be launching, but you can contact him on X, Sacred Prophet on X. But these things, I want to make it clear, it's free. You have to sign up and put Tom as an affiliate on your BitGet, is it?
BitGet and some other exchanges, but BitGet is what we're focusing on.
But even if you don't want to do any of that stuff, I recommend that you take a look at some videos on his YouTube channel, Sacred Prophet on YouTube. Even if those trades are gone, we talk about the markets. Tom gives you an education. It's very, very useful for you to look at that stuff. So you don't have to look at all the videos. And if you like and subscribe, you'll be privy to more as we go forward. But there's a wealth of knowledge there. You can also find Tom on Traders Post YouTube channel. Tons of information there. Fantastic stuff. Tom is in love with this. I'm in love with this. We want to educate the population. We want to give you the tools that can make your trading journey better. Why? Because Tom has felt the pain. All right, the terrible, terrible pain that caused him to want to understand what he did wrong. And what you see here is the birth of the culmination of that process. So, Tom, Sacred Prophet on X, Sacred Prophet on YouTube. Follow us along. Get those magical lines on the chart so that you can see the blonde, brunette, and redhead, because the matrix looks beautiful when you know what you're looking at. Tom, um, everybody's going crazy. Um, it's exciting. I think it's really cool. Do you think people should panic?
Yeah, panic. No, never panic. Find the opportunities that are there. If indeed the bullishness is still there, you want to be buying. And if you think the sky's going to fall and you want to capitalize on that, then short. But express your idea, get it clear, and put it on the chart and make money from it. Just worrying about it, it's not going to make any difference whatsoever. Don't do what I did and just watch all your hard effort evaporate into the air. Take accountability, put your bets on, be safe about that, and reap the profits of your calmness, not your orderliness, not the panic.
And the good thing about what you're offering here is that 50x leverage means you don't have to put as much in to be able to get more out. I
That was
mean,
the most important thing to me. That um, it's hard to beat the markets with anything but leverage. You're not really going to find an edge. I mean, you could. When I was hunting altcoins, sure, that was great. Get into Safe Moon, make some money, ditch out. But that to me is like a full-time thing, and you're betting on sentiment and what's the flavor du jour and am I on the right blockchain and all that, and it can be difficult to do that. Leverage is the way that all these financial people use in order to make oodles of money. It's leverage they're taking out. Hedge funds and institutions and pension funds is leverage that they're using, and so knowing how to use leverage properly and where and what levels and following along with the institutions is the way to go. Um, and so if you don't trade with 50x leverage in order to take advantage of the 2% move, well, then you got to put in 3 million to make it worthwhile, 100,000, a minimum on the low end, 100,000. I don't know. You get a risk of $100,000 in order to make $2,000. That seems to me like sort of get better entries, put in 1/50th of that, and then also make your $2,000 off the 2%. To me, or off the move. I think that makes a lot more sense to me.
get your feelings out of it, folks. Your feelings. The charts don't care about your
No.
feelings.
You put on your half a trade, and then you walk off.
That's what
I'm
I mean.
surprised at my feelings.
That's
I
what I
can't control
mean.
my feelings. I can't control it. I feed it a little
No,
bit. Here's a little taster.
but that's what I'm talking about, right? Risk mitigation. The risk management is how much are you willing to lose, not how much you're willing to gain. So all you people out there with FOMO and freaking out, look at the charts, express what you believe, use 50x leverage so that you don't have to put it too much of your money in, but you can get the rewards even on small moves. Chill out, okay? Relax, because trading can be, I'm told, fun. All right. Now, apparently, it's not fun for a lot of traders, but it can be, and it's becoming more and more fun here over at Secret Profit.
It's as fun as war is.
What?
You don't fight for the war. You fight for your brothers, right? That's sort of camaraderie. That's what you fight for. I'm watching Daredevil right now, and that's what the Punisher
Oh, I
does.
see. So Daredevil.
Yeah.
Okay. All
Because when I
right.
was on the front lines, like that's not when I was afraid. I was afraid when I got on the plane back home. Yeah, that's how I feel. If I'm
Okay.
not training,
All
that's how
right.
I feel bad. When I'm in the markets, I feel pretty good. Am I the Punisher? I think I am.
I think you're more like Bane. I was born in the darkness. All right.
That's it for us. We'll be back next Sunday with another